listening to the Agent Survival Guide podcast, a podcast for today's insurance agents. Informing, educating, empowering, improving the way you do business in an industry that's anything but static. In today's episode, we have two guests joining us to talk about some of the upcoming changes and challenges coming to the ACA marketplace for plan year 2026. With those challenges, though, come opportunity, and we are looking forward to getting into those details. Danica, Lisa, thank you so much for joining us.
Hi, Sarah. Thanks for having us today.
Good morning. Thanks for having us.
Absolutely. Now, before we get into our discussion, can you give us a little more background on yourselves, your title, and just kind of a brief explanation of what it is you do? Danica, we will start with you.
Yeah, my name's Danica Stover. I'm Director of Product Sales here with Ritter Insurance Marketing. I've been with the company for a little over 9 years, have some prior experience on the Medicare Advantage side of the business, and then started our under 65 division in 2022. So worked on the ACA primarily for the past few years, and now oversee all of our Medicare Advantage, Medicare supplement carriers, as well as our ACA, and we're in the Medicare ancillary divisions. So definitely have had a lot of experience and had opportunity to learn about the individual market over the past 3 years.
All righty. Lisa, what about you? Can you tell us more about yourself and your role?
Sure. So my role here at Nexben is Senior Vice President of Partner Success. And I've been with Nexben for about 5 years now, and primarily focusing on working with distributors of all shapes and sizes, mostly brokers, FMOs, general agencies, really focusing on setting each of our partners up for success in distributing an ICHRA solution. Prior to working at Nexben, I had about 25 years experience in the insurance space, working for a managing general agency in Michigan, where we partnered with the likes of Blue Cross Blue Shield and several life and disability carriers, both for group and individual products. So I've been in this space working very closely with brokers for many a year, and really enjoy partnering with folks to introduce a new product and help them learn how to leverage it with their clients.
All right. Well, that's great. That sounds like there's a lot of experience that the both of you have between you. So let's get into the bulk of our conversation today, talking about some of the changes that are coming for plan year 2026. Danica, can you go over some of the more major changes that are coming in the next year?
Absolutely. So there's 3 main regulatory or legislative items that we have that are coming to a head kind of at the same time or converging right now that are impacting not only plan year 2026 and 2027, but there's actually a few changes that are going to be going into effect as of August 25th. So by the time you're hearing this, some of those rulings may already be in place. We have the 2025 Marketplace Integrity and Affordability Rule, which was finalized in June. We also have the One Big Beautiful Bill Act with the ACA legislation within that was finalized in July. And the last item that we have are the enhanced subsidies that have been in place in the ACA market since 2021, originally renewed in 2022 through the end of 2025. So those are set to expire as of December 31st of this year. So I want to start with that just to unpack that for a moment and explain some of the ripple effect that will happen from that change. So with enhanced subsidies, it not only allows individuals over 400% of the federal poverty level to gain access to premium subsidies or tax credits to reduce their monthly premium through the marketplace, it also offsets the premiums for the other plans all the way down to 100% fully subsidized individuals. So right now we could have individuals that have a zero premium silver plan that will no longer have access to a zero premium silver plan next year. It's also going to impact individuals on the higher income side of the spectrum if they're over 400% of the federal poverty level, because they will no longer have access to those subsidies. They may be paying full price. And on top of that, annually, premiums increase typically across the board. So you have premiums going up, plus the enhanced subsidies ending. There's a lot of change happening with that. And then we have the regulatory changes that are coming out of those two provisions or rulings that we talked about as well. So a couple of those main changes that are going to be coming out of that include the 150% federal poverty level SEP that exists today is actually ending on August 25th. So if you log in to submit an enrollment on August 24th, you may have that available to you to work with a consumer. It will be updating in the system. So August 25th, that is no longer going to be an option. And paired with that, from the One Big Beautiful Bill Act, there's actually going to be a change that individuals will not be able to gain access to premium tax credits based on their income alone. So they would have to have another qualifying life event to gain access to that. Some of the other key changes that are coming out of that include tightening up timeframes for data matching inconsistencies, no longer accepting an attestation of household income for self-employed individuals. They're going to be looking at their past year's tax records and information and having to provide more detailed statements and information versus an attestation. Also, for immigration statuses, the DACA recipients will no longer be eligible to enroll as of August 25th through the marketplace. Those are just a couple of key changes. One other one that I would highlight for those that are selling in the federally facilitated marketplace would be that if you have someone that's at a zero premium today that is renewing at zero premium for 2026, if they do not actively update and renew their application, they will have a monthly $5 premium responsibility until they go in and update their application. So that's going to be a major change if you have clients that you can't get in touch with or that normally just passively renew because things have been status quo. It will not be status quo for 2026.
Right. There are certainly a lot of changes coming. I know I recently read estimates from KFF that had ACA premium changes coming in at about an 18% increase for next year. So there's certainly a lot of change coming. Kind of talked about things on the client side of things, what it's going to mean for our clients who are in those plans. But what about on the agent side? What are some of the changes that agents need to be aware of, and how can they prepare their clients for the changes that you just mentioned?
Yeah, that's a great question and something that I think everyone that's in this market should be preparing for already. And if you haven't started, now is the time. So just as those changes are going to impact your members, you need to be able to educate them and understand what those changes mean for you as a broker. There's a variety of resources and tools. We're hosting trainings on this for agents. If you work with Health Sherpa or other marketplace resources and platforms, it's another great source to make sure you're up to date, know what system functionality works like. But really, I would say it is about understanding those provisions and how it impacts how you do business, making sure that you're contracted and certified early this year and contracted with all of the available options in your market if possible, because we don't know what premium rate increases are going to look like yet. Insurers actually have until August 13th to file their premium rates for 2026. So while you can look at what rates have been filed, those can also be changed again. And we may not know the full look of the landscape until sometime in October or even November 1st in some cases. So contracting certification starts to take a lot longer as we get closer to AEP and OEP. So whatever you can be doing today to set yourself up for success is going to be important. Carriers are going to be hosting trainings and providing additional resources. We know carriers are also going to have information and trying to educate members a little bit more so that they understand the importance of actively renewing, but also understand the importance of insurance, because there's going to be individuals that are making a choice this year between maintaining their coverage and paying a higher premium or considering going without. And I think that's really a big key role of the brokers and agents this year is presenting the value of insurance and communicating to their members the importance of actively renewing and providing accurate data.
And with all of those different changes coming and potentially this many people shopping for either different coverage, new coverage, maintaining their coverage. We usually recommend, at least in the Medicare space, that the best way to handle all of those different needs is to really have a diverse portfolio. But I don't know that we talk about that as much on the ACA kind of side of things. So how do agents diversify that portfolio in the ACA space?
And that is another great question. I think there's a few different angles that we can approach with that. There's diversification in the types of products that you work with. There's also diversification in the markets that you serve. So talking about products, I think offering a comprehensive portfolio of options to your clients. Of course, if your members are 100% fully subsidized and they're paying a zero premium today, they may not be the candidate to cross-sell and offer additional ancillaries to. But for your members that have somewhat of a higher premium responsibility or are facing these premium increases that can budget and afford to bundle some additional products, you might be able to put together a package for them, including dental or accident or an indemnity style product that will actually give them more comprehensive coverage at a lower price point than going up a metal level. So maybe you have somebody in a silver plan today. You might look at a zero premium bronze plan that might have higher co-insurance and out-of-pockets that you can offset with an indemnity at an affordable price point to them. And with dental and accident products, obviously dental, we don't see underwriting for those. Sometimes there's prior coverage requirements. But with accident, a lot of those policies are actually guaranteed issue as well. So there aren't health questions, which is something that can definitely come up a lot when you're working with the ACA marketplace because those products are guaranteed issue as well. So that's one way that agents can diversify. Another way, as I mentioned, with looking at different market segments, if you're not already selling Medicare and you're primarily selling in the ACA market, we can be a great resource to you to help to get into that market space as well. We've got a lot of great resources and trainings and tools. And obviously, your clients that are on the marketplace are eventually going to age into Medicare. So it's great to make sure that you're offering both. The other market segment opportunity that ties into why we have Lisa joining us today is looking at some different market segments that are still tied to individual. And one of those would be ICHRA, which would involve working with businesses or small businesses to offer individual products to those clients. So that's another way that you can diversify your book.
Now, when it comes to ICHRA, Lisa, can you explain a little bit more about maybe just a base definition of what ICHRA is and how it fits into the changing ACA marketplace landscape this year?
Sure. So, I try to simplify what ICHRA is. So ICHRA by definition stands for Individual Coverage Health Reimbursement Arrangement. And really the way we simplify that explanation is to say it allows an employer to move from a defined benefit type of offering to a defined contribution type solution. When an employer offers an ICHRA solution to their employees, it really unlocks the flexibility for both the employer and the employee. What it ultimately allows is an employer to either expand or simplify where they're offering benefits to. They can offer to all employees. They can offer to a wide array of classes of employees. And they can also offer an ICHRA to classes of employees that they may not have been able to offer benefits to previously, such as part-time workers. It's definitely flexible and unique in the market, and it provides that flexibility again for the employee to shop for benefits that ultimately they need versus being offered maybe 1, 2, or 3 plans that the employer is driving them towards. For the broker community, it's really a unique expansion opportunity for both group producers and individual producers. And I'll explain a little bit further. So with group producers, obviously, you're primarily focusing on your traditional group offerings. And year over year, brokers and employers have experienced significant rate increases. And they're in many scenarios kind of running out of solutions. And so the brokers that are traditionally focused in the group space, this gives them the ability to provide an alternative or an additional type of product to their clients that allows them to retain that client with net new solutions, reduce costs for their employer. It also allows them to draw in new clients where perhaps they may not have had an opportunity before. group brokers are skilled in positioning products to employers. They have existing relationships. They know how to target individual employers directly. And so this is just a nice new product that they can offer. On the individual side, an individual broker, they're typically used to, selling individual policies, whether it be through carriers directly, through ACA plans, things along that line. And so what's unique about ICHRA is brokers who are typically versed with individual products, they know how to service the employee and help them make those individual benefit elections that uniquely support their needs. So where they can diversify is looking for opportunities to expand their reach by marketing an ICHRA solution to employers and leveraging their experience in the individual market and how they take care of the employee experience.
I think at least definitely on the employer side of things, I know I've been in a position where costs have gone up because of health risk at a small business. So if this offers the opportunity for an employer to be able to still offer coverage rather than, sky high premiums or anything like that, I can see that being something that employers would be interested in. In just the past few months, what has changed with ICHRA that agents should know about? Maybe if they haven't previously looked at it, or if they have and they've said, maybe not this year, what is different about it coming up for 2026?
So I think a couple of things are noteworthy. First of all, we were really hopeful when ICHRA was initially included in the Big Beautiful Bill. Unfortunately, it didn't make the final cut. But the good news with that is that the bill generated a lot of awareness about ICHRA and defined contribution plans in general. So we're hopeful that legislators will allow for additional work to occur and look for ways to bring it forward. All that to say, there are some states who have introduced legislation offering tax credits to small businesses when they're offering an ICHRA. So for example, Indiana recently passed a bill. They provide employers with fewer than 50 employees a $400 tax credit for each employee. And then in year two, $200. I know there's a handful of other states that have been looking at similar types of legislative changes, looking for those tax incentives for employers. Nothing's passed yet, but it is something that states are exploring. There are lots of ICHRA solutions out there. It is gaining traction. There is a lot of visibility into this space. And so ICHRA vendors such as Nexben have really been committed to looking at how we heighten the awareness and bring solutions forward to brokers and employers.
Now, when we think of these ICHRA enrollments and we think of ACA market individual enrollments that a broker is selling, what is the impact that the ICHRA enrollments have on the larger ACA market as a whole?
Yeah, that's a great question. So I kind of look at it this way. So when an individual is participating in an ICHRA, they can purchase either an on-exchange or off-exchange plan. There's advantages either way. But today, most carriers don't have visibility into who is a true individual consumer and who is an ICHRA consumer. And so all of those policyholders are part of the same risk pool. Over time, what we anticipate happening is carriers are going to start experiencing pressure because those risk pools are combined. They're going to experience the pressure of looking for ways to kind of split them and provide products that are applicable and competitive in each respective market. An ICHRA consumer might want different types of plans than an individual consumer. So they're going to need to identify the difference in who their consumers are so that they can move that forward. We're actually already starting to see some of that happen. So some carriers are starting to make a shift, gathering the data to help themselves identify who is an ICHRA participant and starting to inform their product development process. So with that, I see some carriers starting to consider ICHRA friendly or even ICHRA exclusive products that are designed to that sort of consumer separately from a traditional individual consumer. So the carriers that are being more forward thinking in that way, they're the ones that you're really starting to see rise to the surface and bring value to the consumer. They're winning.
That's interesting. I'd be curious to see the difference in those two consumer groups. That'd be an interesting data comparison. But one thing we really haven't gotten into is what exactly does Nexben do as far as the ICHRA solutions that you offer for brokers and for individuals?
Yeah, great question. So Nexben, we've been around since the inception of ICHRA. We've evolved through that process. We've learned a lot, and we've tailored our solution to be very friendly for brokers, employers, and employees. And in doing so, we've really put some flexibility into our solution through that end. So, we position our technology tool to allow the employer to utilize the product for the contribution strategies and the facilitation of premiums on a monthly basis. So we charge a monthly per employee per month fee to the employer. There are no startup costs, no minimums, and no renewal fees. Brokers have the flexibility to add an additional consulting fee on top of our monthly fee, and we can invoice and collect that for the broker on a monthly basis. In addition to that, from the broker perspective, we provide flexibility in that, as I mentioned, Nexben is never going to take the broker of record on those individual policies. However, every broker is different. We know that some brokers are very well versed on the group side of the business, and they would prefer to focus on taking care of the employer, and they're not as well versed in how to support an individual consumer or individual product. So we have the flexibility to allow the broker who brings the employer through to either position themselves as the broker of record on the individual policies or leverage an enrollment partner that will support the employee experience. We can support and accommodate either or a combination of both. And then through that scenario, what we also do is we really take more of a marketplace agnostic approach. So as a broker contracts with Nexben, we can embed any marketplace into our technology tool for the employee shopping experience. So if a broker is utilizing a personal URL with Health Sherpa, or they're leveraging an enrollment partner, or they have a desire to direct individuals to their agency website, or any combination of those things, we do provide that flexibility and we embed that right into the experience for the employees. The biggest thing that I think is really important about the Nexben solution is how we provide transparency in our payments. So for Nexben specifically, we provide a payment solution via an ACH model. And with that, we are set up as a true fintech solution. And so we act as an extension of a bank. We own all of the individual accounts, and we reconcile all of those individual accounts on a daily basis. So we can see in real time when there is a discrepancy or a potential problem that needs to be addressed with an individual consumer. And we surface those insights both to the broker and to the employer, both through regular outreach and through our platform. So people can see where there is something that needs to be rectified before it becomes a problem. So we don't typically see situations where it's a high pressure issue and an individual has lost coverage and require reinstatement with a carrier. We catch that before it happens and make sure that those are resolved ahead of time.
And that's fantastic. One of the things that you mentioned a little bit about partnership, and for the people listening today, how can the brokers partner with both Ritter and Nexben in the ICHRA market?
Yeah, great question. So we really have, in our opinion, the most flexible and scalable ICHRA offering in the market. We want to help you at Ritter bring this to your brokers. So we're here and ready. We work very closely with Danica and their team on a regular basis. We've set up a dedicated team at Nexben to support the Ritter population of broker partners. So we have a custom email address, which is RitterICHRA@nexben.com, and a dedicated phone line, 888-613-6461. You can leverage either one of those, and brokers can contact our team and we'll start a discovery call and help answer any questions they have.
Okay, so super easy to get started. You can send an inquiry into that email, call the number that was mentioned, and we'll be linking both of those in our episode notes. Now, Lisa, I know you've already gone over this many times in the different points that we've talked about here today, but if we can just kind of come back to this and maybe sum up some of the main points of why ICHRA is attractive to employers and their employees.
Sure. So for employers, this really helps them stabilize their costs. It's a simplified administration, and it really helps them kind of shift away from being a benefit and claim manager with their employees to more empowering their employees to personalize their coverage. So, their cost and their administration are more predictable year over year. And it really helps to boost the retention and recruitment for employees when employees recognize that they have more flexibility. It also allows employers the flexibility in who they're going to offer coverage to, and either expand to new unique classes or simplify who they're offering a group benefit to and who they're going to offer an ICHRA solution to. On the employee side, a couple of really key things that I think are important are, employees have freedom of choice now. So rather than the employer saying, here's your benefit, would you like it? Yes or no? Now they have the ability to go purchase what they actually need for their family. That's a big deal. If they are leaving their employer for whatever reason, their benefits are portable, so they can keep them when they leave. And all they have to do is simply go in and change their payment mechanism. There's also options for any elections beyond the contribution to be payroll deducted pre or post tax for the employee. And if there is leftover and the employer is allowing, it will also allow the employer to purchase benefits beyond medical with their remaining contribution, so they could leverage it for dental, vision, ancillary products.
Okay. Lisa, is there one piece of advice that you could give our agents looking to grow their business in the individual market?
So I would say if you're considering it, if you're on the fence about it, learn about it. Don't stay on the fence any longer. It's definitely gaining traction. It's a huge opportunity to learn and expand where you're offering solutions to clients, growing your business, retaining your business. Now is definitely the time, whereas over the past few years, it was kind of a new thing and everybody wasn't sure. They kind of wanted to just wait and see. It's not going anywhere. It's gaining momentum. So now's the time. Embrace it and give us a call.
Okay. Danica, do you have any advice for agents who want to grow their business in the individual market?
Absolutely. I think this might also apply outside of just the individual market. So change is something that we see every year. It's one of the only constants we have, whether you're in the individual market, Medicare market, or both. We're constantly having to adapt to changes. So embrace a growth mindset, continually learning, adapting to new ideas and changes and new ways that you can supplement your income or adapt your business and support your clients and grow your client base. Because the agents that choose to adapt and adjust are the ones that are going to be successful. And when people leave the market because of challenges and change, it creates opportunity for the agents that have adapted and adjusted to stay in that space.
Very, very well said. Lisa, Danica, I just want to say thank you both so much for being here today. It was a pleasure talking with both of you, and looking forward to our agents reaching out to be able to learn more about what you've talked about with us here today.
Thanks
Sarah.
So
much, Lisa and Sarah. It's great to talk with both of you today.
Yes, thank you.
Special thanks again to Lisa Marzolino and Danica Stover for the interview. To learn more about ICHRA, visit our episode notes. We will have links to information on Ritter's partnership with Nexben, information on how to reach out to our ACA sales team, and more. Thanks so much for listening to this installment of our show. We will see you next episode. The Agent Survival Guide podcast is a production of Ritter Insurance Marketing, an integrity company. Special thanks to Lisa Marzolino and Danica Stover for the interview. Recording and production by me, Sarah Ruppel. Podcast design by Urban Rivera. Artwork by Tina Lamoureux. Like, follow, rate, and review our show wherever you get your podcasts.